Welcome in. Let's sit here just a minute while some of you come in. I am glad you are joining me for Just the Facts 2023 housing market. We're going to go over some facts and some data to show you what's going on and what's expected in the 2023 housing market. Now, I just saw this morning, and this is not part of my presentation, so I wanted to just add this. I saw on the business news this morning that new home loan applications are up 28% from last month. So that's great news. That is just a further indication of kind of what I'm going to dive into here this evening. I'm glad you're here. Thanks for stopping in. My name is Bruce Klein. I'm a loan originator at Oz Lending. And whether you are here watching as a potential home buyer, as a seller, or you are a realtor and just want to update your data and learn some new facts that you can share with your buyers and sellers, I'm glad you're here. So I know you're going to get some value out of this. So let's get started. And if you have any questions, you can ask me here in the chat or come on here at the end. This is going to be pretty quick, about 15, 20 minutes. I don't want to take much of your time. Thanks for being here. I hope you've all had a great day. So let's just dive in. So what I want to talk about first is the, you'd have to be blind and deaf and not watching the news, hearing the news at all. If you're in this industry or you've thought about buying a home in the past year or so, it's no surprise to you that we saw a huge increase in interest rates last year. In fact, the 30-year doubled, and the 30-year fixed rate, that's never happened before. That's the first time that we've seen that happen. So the majority of people watching and reading the news and listening out there to people talking, they're only getting, that's all they're hearing. That's all you're hearing is the noise about, oh my gosh, you see what's happening with interest rates. Oh, are we going to have another housing bubble? What's going on? So if that's all you're hearing and you're listening to those whose motto is, if it bleeds, it leads, then, I'm sorry, but what are you going to expect, right? So, but unfortunately, bad news is what tends to drive the ratings, right? So what I want to do here in this brief presentation is just give you some current data and facts so you can get a full picture. You can see the other side of this, okay? Because there have been some market adjustments. There's been some rate adjustments. Some new products are coming on the market that are making things easier for home buyers. So I just want to help you be able to make a more informed decision if you're considering buying or selling. And if you're a realtor, I want you to be able to share this information with your potential clients. So the 10-year Treasury, which not a lot of people follow. If you're in this business, you will. If you're in an investment business, you like to pay attention to it. But the 30-year Treasury it's a huge indicator of the housing interest rates. So as the mortgage rates have typically moved in unison with the 10-year Treasury. So that's what these lines are showing you here. And that the typical spread is around, it averages around 1.7. And so that 1.7% is where mortgage rates run a little above what the 10-year Treasury, and that yield spread is there primarily for the investor, the investor profit, right? So if you want to look it up, it's on. You can look up Google 10-year Treasury. You'll see it. If you watch it daily, it'll give you kind of an idea of what is likely happening with mortgage interest rates. Now, as rates started going up quickly last year and doubled, we saw the market panic. Okay, so investors were uncertain of what was going to happen with the market. And so it pushed that yield spread even higher. And you can see it there. It's going crazy. And so many buyers and sellers pulled back since there was uncertainty. Investors didn't know what was going on. Costs were going up for just a secure loan. Prices were going up. So now, though, what we're seeing, we're starting to see the panic subside just a bit. Okay, so um, we're seeing rates level off. In fact, we've seen them decrease. And so as we see new products introduced to the market, that's also bringing more buyers and sellers back. Now, if you can see at the beginning, I mentioned that this morning I saw a number on the business news that said the new loan applications for 2023 are up 28%. And that's great news. That's a good indicator. So check this out. I want you to read this with me. So be advised, this may be the one and only window for the next few years to get into a buyer's market. And remember, as the Federal Reserve data shows, home prices only go up and always recover from recessions, no matter how mild or severe. So get this, long-term homeowners should view this market right now as a unique buying opportunity. So many experts agree on this. And what this means is, as a buyer, you have more opportunity to find available homes because there's less competition. All right. So even if the rate's a little bit higher now, right, you can now find that home that you couldn't find last year because so many people were in the market. You could find it. The rate's a bit higher, but get the home while they're available and refinance the rate later. I mean, you could do that, bring the rate, and when the rate comes down, go refinance it, but at least then you'll be in a home. So during this period of what we call a buyer's market, sellers are more likely to offer lower prices and seller concessions, such as closing cost, or they're offering the rate buy down in this buyer's market. So in recent years, especially this last year, we only saw a low inventory and rising prices, which created bidding wars, all those bidding wars for homes that pushed prices higher, and it just squeezed many buyers out of the market. It made it unaffordable for many. And a lot of you got frustrated trying to buy the home because you're making bids and then you didn't get it. And then you tried another one. And it was a crazy, crazy time. So what we're seeing is kind of a leveling off, a more normalizing. So the upcoming months, Lawrence Yun here, he's the chief economist for National Association of Realtors. He says the upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. So what this means is, while rates may continue to drop, which we hope and we think we'll see, and we all hope we'll see, if you as a buyer are continuing to wait and you think, well, I'm going to wait, maybe it's going to come back to 4, 3.5. Well, what do you think is going to happen? All right, if you continue to wait, you're likely going to miss that opportunity to buy during this buyer's market, because all those people are going to rush back into the market again, squeeze you out. So look at this as a unique opportunity as a buyer. So what are they saying about how many homes are going to be sold? Most of them, you can see it's around 5 million. They're expecting this is for existing homes in 2023. All the experts kind of agree around 5 million is going to be that number. So on that note, what are the key highlights about that? So National Association of Realtors predicts 4.78 million existing home sales in 2023, which is down from last year, 6.8%. The annual median home price, and this is key here because they're saying it's really leveled off. They're only going to see maybe 0.3 increase after the national average of last year, 9.6. And in many markets in Texas, we saw, increases of 20%. It was crazy. So in fact, it says Atlanta, Raleigh, Dallas, Fayetteville, Arkansas, Greenville, South Carolina are going to be 5 of the top 10 markets to look for in 2023. So again, this is recapping what he says here about the median prices, and it's not going to increase much more than it's basically going to remain level, which is good for us as buyers. So this is also regional, right? So depending on where you're watching this from, maybe your part of the country, you're going to have see great gains, while some parts of the country will see decreases. It's always regional. You know what's going on in your market, you can find out pretty easily from your local experts. So, what I wanted to point out here, though, that's key, is Yoon says rent prices are expected to rise 5% in 2023 after they already increased last year on the average 7%. I've heard from a lot of you saying it went up a lot more than that. So that's one of the things about home ownership. You get your fixed rate, you know how much your taxes and insurance are. It's not going up. Unless your taxes go up, your insurance goes up, your payment's going to be the same. There's none of this. Okay, now I heard they're only letting people sign 6-month leases now because they want to be able to go up depending on what happens. I don't know if that's true. Someone told me this the other day. I hope that's not the case. I remember when you could sign 18 months, 2-year leases. May not be able to do that now in this market. So what are they saying about home prices? You can see there's kind of a spread here, all the way from Realtor.com to Zelman. There's a range of almost 10%. So there's not, according to these 7 home price forecasters, there's not really a true consensus. And so while we've seen prices increasing at a record pace in the past couple of years, most agree that this market is going to pretty much remain flat, is what they're guessing. So now keep this in mind. In a market that favors buyers, sellers often must lower their price. Okay, they've got to lower their prices. They've got to agree to more contingencies and endure longer days on market. So buyers face less competition, fewer fears of bidding wars. So it's giving the buyers greater leverage in the deal. And as I mentioned, obviously this is a regional thing, depending on where you're watching this from. So the housing market, once adjusted to this new normal of higher mortgage rates, will benefit from continued strong demographic-driven demand relative to an overall long-run shortage of supply. So we haven't caught up. The supply is not catching up. New builds aren't anticipated to increase. We're not seeing a big increase there. So that helps. So a slow market is better for buyers, right? Because as a lower volume of homes in demand slows that upward price pressure. Okay, it doesn't push it up because lower demand, right? Now, because of that, it makes it a little bit more affordable. And I think the best part is there's not the competition. You don't have 10 people bidding for the same home that you hope you get. Now it's a time to find one where you don't have that competition. And before the spring, by the way, during these months here, we're in mid to late January, but before we hit spring, when the buying season starts, now is a good time, if you've been on the fence about buying, to get out there and look. So mentioned products, other products come on the market. The ARM, the adjustable rate mortgage, it's not a new product. However, it doesn't have the stigma. Okay, so as it says here, the risk of the adjustable rate mortgages were substantially mitigated by all the regulatory reforms put into place after the 2008 bust. So they've made a comeback, and they should no longer be feared because of these regulatory reforms. And they're feared because of sticker shock. There were some bad lending practices, and folks were all of a sudden finding out that their payment doubled, things like that. We've got these new regulatory actions in place, and that can't happen. So adjustable rate mortgage, it could be a really great option for someone who's looking to get into a home and get a lower monthly payment and gain some equity, and then decide if you want to stay in the home or if you want to refinance it at that lower rate before that fixed option period ends. Usually an ARM is 5, 7, or 10 years. So you've got your payment for 5 years, 7 years, or 10 years before it makes any adjustment. So it's a great opportunity to get in lower. And then as you build equity, and you'll decide, most homeowners in the first 5 or 7 years are looking for their next home. So even before it adjusts, you might be ready to sell and move to the next home. So take advantage of that. But look at this. This is really an exciting product, and we're hearing more about the temporary rate buy downs, a really hot trend for mortgages right now. And in a higher rate environment, which we're experiencing now, even though it's coming down, lenders, we all refer to this temporary rate buy down as a win-win strategy for both the buyers and the sellers when it's used appropriately. So as rates increase and housing prices correct over 2023, sellers are going to want to take advantage of improving their chances to do business with an excited buyer who can obtain a lower than market rate with that seller's participation. So if the process is explained correctly to both parties, and if realtors are armed with this information, sellers and buyers are going to enjoy seeing each other win and accomplish the goals each other has. And think of this, it gives the buyer and the seller the feeling of beating that mutual enemy, we beat the market, or we gain the system. So if you want to know more about a 3-2-1 buy down, 2-1 buy down, how they work, and how that really decreases your initial monthly payment and what the difference is between that and using the adjustable rate mortgage, I'm happy to go over all that with you. I just want to be here to answer those questions. But basically, I just wanted to pop on here this evening for just this brief time to show you these statistics, arm you with some facts that you're not hearing. So I hope you gained some valuable information from this. If you want more information, I can easily be reached on my website, brucekleinmortgage.com. There's my email address. If you want to take a snapshot of that, if you're a realtor watching this, this is something new that I have. It's called Grow My Brand, and it's at a website at growmybrand.pro. And so what I'm doing is I'm offering several new courses and webinars that are social media marketing courses to help you learn how to get out more, get your brand out in front of more people in your social media sphere. And we've got some great courses coming down the pipe, and I want you to stay tuned for those. You can go to that website, growmybrand.pro, sign up for the VIP email list, and you'll be the first to learn about any classes that are in your area or that are coming up online for free. So listen, thanks for coming in here this evening. I appreciate your time. I hope you found some valuable information that you'll be able to use. Again, if you have any questions, I'd love to hear from you. Let's see here. I don't see, hey, Jim. Good to see you, buddy. Just seeing if we had any questions. I don't see any questions right now. If you have any, you know how to get in touch with me. Hi, Lena. Hey there. So I'm available. All right. You guys have a great night, and I'll look forward to talking to you soon. Take care.